All right, welcome everyone back to this video. In this episode, what I wanted to do is I have my good friend Mike here, who is a crypto fund manager who is visiting me from Austin. We're hanging out here together, going to Art Basel in Miami. And there's not many times I get to sit down with Mike. Mike's pretty busy. He's flying all around to Singapore, and he gets invited all over the world to go to different conferences and network with crypto founders. And I wanted to kind of have an episode that's maybe out of the ordinary. There's not many times you get to talk to a fund manager like this. And there's a lot of shifts happening, what feels like, in the crypto space and what's happening around the world. It's December 2024. And I wanted to have Mike come on and just share a little bit about his fund, what he's seeing. I'm an investor in his fund. I have over I think I have over $1 million as of this month with Mike, but Mike's been managing my capital for, I think, over 4 years now, and he's a brilliant mind, and I'm happy to have him on the show today. Hey, Mike.
Hey.
Welcome.
Yeah, man, thanks for having me down. It's been really fun staying with you and Ashley. We've got to do a lot of fun stuff, and obviously Art Basel is a great time to get a taste for what's going on in the art and fashion world, but just in general, as it draws a lot of affluent people here.
Love it. So, Mike, to kind of start us off, give us a little bit of background on how you got to this point of managing this crypto fund, maybe how many investors, like what your assets under management are, what you're looking at, what your portfolio makeup is, like in the story of how you got into managing crypto in the first place.
Yeah, so I mean, I've been in the venture capital space for over a decade when I discovered crypto in around 2017. To me, then it made a lot of sense. The Bitcoin thesis was a little bit more anarchist then. Plus, frankly, I didn't look into it. I'm sure a lot of people can resonate. You hear about all sorts of different things. It's hard to take the time to deep dive, right? Especially on emerging technologies. But when Ethereum came out, I was like, look, this is very obvious. It's a new platform to launch the next version of the internet. And with every version of the internet, some of the biggest, most successful companies are built, right? So in Web 1, you had Intel, you had a bunch of different companies that we know today, like Amazon. In Web 2, you had Facebook, right? You had Google. And now in Web 3, some of the biggest projects and biggest companies of the next 10 years are launching, right? So I was like, this is an opportunity I can't miss out on. I was looking for a fund manager that I thought would have a good combination of, they're in there, they're an insider, they're talking with all the founders, they know all the new projects launching, and they can have direct conversations with the teams, as well as somebody that had good portfolio management experience and looked at the space as I looked at, which is, how do we want to invest in emerging trends and companies that we think will be very successful over the next 5 to 10 years. I didn't find that. So I just managed my own capital in the space, really focused on a full-time becoming the expert. And then I had some VCs that I've worked with in the past, people like Pascal that were like, look, we're in this crypto thing too. We're starting to get our toes wet. It's completely overwhelming. It's taking up all of our time. We're not trying to have another 60-hour, 80-hour a week job on top of
or just afraid of making a mistake.
Afraid of making a mistake, right? Most people that have been in the space long enough have had some sort of hack, some sort of phishing link issue, some sort of security breach. And, that's kind of table stakes for the space. And, I think the problem with crypto is everyone wants to learn, and the best way to learn is by doing, but precision is so paramount, right? And when you have a substantial amount of capital, you need to be in the space in some sort of meaningful way from a monetary perspective. But it's like, you wouldn't try to learn how to fly a plane. If you're interested in flying, you wouldn't be like, tomorrow I'm going to go fly a plane. And I'm just going to not have a pilot, right? But a lot of people, I think, are having to self-manage in crypto because they don't know of another option, right? And our fund is really cool because it's essentially, you get to participate with an entire team and security experts to help navigate not only risk management, but find the best projects in a diversified kind of way. You get all that at your fingertips without having to worry about it yourself. And so I think of liquid crypto investing, liquid meaning you can freely buy and sell tokens. So you can reduce positions with very little friction. You can increase. This is different than a venture capital fund that focuses on crypto projects, where you are invested in illiquid assets, maybe for less time than traditional venture, but still for a substantial amount of time. And so we really, the portfolio is run in the same way that I manage my own capital. It's all of the principles and best strategies that I built up from being in venture capital for 10 years, as well as my on-chain experience, my experience with things like liquidity pool, lending, generating interest on-chain, and then practicing good diversification, not only within the projects that we invest in, but also within where we allocate our assets. So for, a lot of people have learned these lessons the hard way, but a really good analogy is you can stake your Ethereum, and a lot of people just stake it in one place. But there's even some sort of risk that Ethereum could get slashed, even though small. So we do a lot of cool things in the space. We're always on top of it. We'll even do things like airdrop farming, which is free tokens delivered if you if you have the knowledge to do a bunch of on-chain activity. And we stay on top of the trends and get in everything. And so our investors really like it, like yourself, because you're building a successful business. You don't have time for it. And the consequences of doing something wrong, they're so permanent and they can be so disastrous to your returns.
Love the intro. I think where I think about why I've decided to invest with Mike is when you think about if you want exposure to the area of crypto, right? I'm only talking to people that want that kind of exposure. You can say, look, I want to buy some Bitcoin or some Ethereum or some tokens, and that's going to be to the extent I'm going to play the game. Or you're playing the game in a way where you say, okay, I know that there are going to be a lot of emerging technologies and tokens, and there's more to this ecosystem than just Bitcoin and Ethereum. How do I get exposure to that? And that's why I'm working with Mike, and we've seen great returns.
Yeah, I mean it's been great, and crypto obviously it's in the at the forefront of everybody's mind are this volatility in the crypto market, right? So I've had people that'll just say, hey, crypto's not for you, because in any given month and really day you can be down 10 or 20%, and a lot of people that frightens them. They don't really understand what's happening. But if you zoom out, right, you see an asset class that has outperformed the S&P for over a decade, right? And that's really powerful. And when you go, you're a lot more experienced, Pascal, because you've done a lot of stuff, but I remember you even had Ethereum miners, I think, in your apartment, which is really cool. And so Pascal's very problem aware. And so he's really aware of how much work it is, not only to manage the existing assets, but to always know about the new ones and know if it's a legit team, or anything like that. But I think at the end of the day, look, we don't convince people to be in crypto, right? We serve people that want to be in crypto and they want someone to do it for them. We're always glad to share some of our strategies, and we do that in our newsletter with things that world-class hedge funds do. But once again, you can know exactly what to do, and if you do it wrong, then it can be disastrous, right? And so it's really a product and an asset class that is saying, look, if you believe that the last 10 years of performance is indicative of the next 10 years, and you want to be in the most exciting stuff, you want to be in the next Google or Facebook that's going to launch on this new platform, then really this is a great home for you.
I would love to dig into why you believe crypto is the future. I think Mike has one of the best ways that he talks about investing in they're all different technologies and how they are used in different ways, and how you're seeing some of those being played out right now. Because I think one of the big questions that I always get from people about why are you investing in crypto? And it's because I think it's this beautiful new technology that enables so many new things, and you're betting on this technology. You're betting on these technologies. So, can you tell us a little bit about how you see this playing out, and why you're such a big believer?
Yeah, I mean, obviously we're pretty sold, right?
Yeah,
and we've done a lot of research to back that up. The best way to think of Web3 is it's like investing in some ways in the internet, right? So people forget when the internet was starting to catch on, it had very limited use cases, right? It was email, some other things, maybe some banner ads. You could go to a website, and it was really just reading. You couldn't even write. So Web 2 is read and write, and Web 3 is read, write, and own. And so because of this, a lot of people thought it was just a flash in the pan, right? Very similar to crypto. And honestly, this happened in Web 2 as well, right? When Facebook and all these other social-based companies were getting bigger, there were a lot of people that were saying, we don't understand how these companies make money, right? And people forget that, right? Because hindsight is always perfect, right? And so when you think about the internet has to evolve, and the freedoms that the internet enables have evolved as well. It's offered humans more freedom and more seamlessness, and it's reduced fees in a lot of areas, right? So people forget you used to have to call a stockbroker and pay them like an exorbitant fee to go buy a stock, and that would take days, right? And then the internet came along, and now it's essentially free, right? Or it's very small amount of money to trade a stock, and even like on Robinhood, you can buy fractional shares of stocks, and you can send your friends Venmo and things like this. And what's fascinating is people forget these things happened so quickly because they feel so natural to how we want to act as humans, which is a frictionless experience. So they forget even that they happened, but also you can never take it away. Right? You can never take away the right now for me to have a driver come to me versus me go look for a taxi. We were just talking about the other day when we were looking for it was like we were meeting the Uber driver somewhere, and I was like, man, this feels so weird. The Uber driver comes to us now. And that would be a crazy concept in most of human history, right? You go to where the transportation is, and then you try to find it. And so, crypto is really now starting to blossom where you're seeing it it's either meaningful in a lot of different sectors, and a lot of those are financials of right now, but you're seeing applications in pretty much every sector. So people, they often just think of Bitcoin and think of currency or store of value, and those are obviously fundamental cases, but crypto is very intertwined with AI, supply chain, healthcare, businesses, banking, loans, right? Like all sorts of different industries, right? And you saw this with the internet as well. It had very limited use cases. And now every company is an internet company to some degree. I remember when it was a big deal if you had a website, right? And then it was like, oh, you have a website you can log into and have a custom user experience. Like, oh my gosh. And like, it's now like you can order clothes. Zappos, you can order shoes, right? And it was like all these use cases that built up billions and billions of dollars of wealth generating companies, right? And so it's the same with Web3. It's like, don't get overcomplicated. When you're participating in Web3, if you're doing it from an investing perspective, not just like a casino speculation perspective, which you can use it like that, just like you can use the stock market like that, you're doing venture capital. You're investing in early stage technology companies. That's what you're doing. And, just like Web 2 venture capital, Web 1 venture capital had kind of like their own nuances and approaches and things you needed to look out for that were new or novel, Web 3 has the same. But what's exciting is it's an asset class that represents all these different verticals. And people don't yet think of it like that. But I think as some of these companies, and a lot of them we're excited about because we're still really early, they're not known names yet, or they haven't even been launched yet. But the pace of which they'll be able to grow will be unprecedented. Just like the pace that, the Facebooks and the Airbnbs were able to grow with the internet, and how you were easily able to distribute like those products globally. It's the same with crypto.
Walk us through some of these asset classes and the types of projects you're investing in the fund. So I know that you have I think it started with 40, and now it's, I think last time we talked was 80 different assets that you're invested in. Anything from gaming to information networks to layer one. Yeah, talk about all those and give an idea of the breadth that is out there. Yeah,
so we have a few different theses, and it's how we think about our diversification. The one is that we believe in a multi-chain future. A lot of people aren't as aware that there's all these different chains. And the way that I think of a chain, I think the best analogy that resonates with people is an app store. Right? So it's a place that, or like maybe a Shopify, right? So you go onto this platform, and there's a variety of businesses or artists that are selling their products, or storefronts. So each chain is sort of like a city. It's an economy in itself. And we all have investments across 27 different chains. And so we own maybe the underlying coin of that, that native chain if it has one. But we believe that there are certain ecosystems that will thrive and certain ones that won't thrive and potentially die. And so because we aren't fully sure which ones those are, though obviously we can weigh towards the bigger ones initially, right? Because we can say this is a more sure bet, if there is a sure bet, then we can say, okay, what's like the major or leading decentralized exchange on that chain that serves that chain? And what are the major lending protocols on that chain? So you sort of have like this basket of businesses that you would think about if you were launching a city, right? Like if we propped up a city in the middle of the desert, it's like we need a hospital, we need a bank, we need different things like that. So we want to diversify in different ecosystems. And less than 1% of cryptos that are out there make it into our portfolio. And then thematically, we believe that real world asset tokenization is already here way more than people think. There's billions of dollars in credit, US credit, or private credit, I should say, that are tokenized on chain. There's billions of dollars of US treasuries that are tokenized on chain. Projects are doing everything from tokenizing diamonds to gold to houses. And then financial institutions actually are really embracing this because they have a lot of semi-liquid products that gain there's a lot of benefits from tokenizing them and getting access to global markets and fractionalization. And so there's like these macro categories that already seem deep, I think, for a lot of people. And then the depth just goes infinite, right? It's one of the exciting things about crypto. AI is another big one. People don't realize how important crypto is going to be for AI for a few reasons. One, deep fakes, the ability to falsify information is getting more sophisticated with AI. Blockchain is a great way to battle this with an immutable ledger. You can see what the data was. Even if the AI is really savvy in how it manipulates or changes it, there's probably a person or maybe a counter AI that's going to detect, right? So like now you're seeing there's AIs that detect if something was generated by AI. So we're entering this whole dawn of AI. And as you have AI agents emerge, which are AI programs that are going to go off and do things as if you had an executive assistant or an analyst and you said, hey, go do this. They're going to need to natively pay for things. And it's going to be frictionless to have these things on chain. And so, there'll be Web 2, but I think Web 2 consistently is blending into Web 3. And I think the advantages to doing all this stuff on chain is going to be really apparent. And then we have some other cool themes that we think is just, okay, if Web3 is the future, what needs to happen, right? So there's projects that are working on improving scalability of these chains so they can do more transactions. And the more that a chain can do transactions or has interoperability, the better that vision of the more use cases emerge, right? So like YouTube couldn't exist until the internet infrastructure had reached a point where it could facilitate that solution, right? And now we have all kinds of solutions. We have cloud, right? And we don't think about all the companies that are reliant on there being not only cloud storage, but cloud computing now. And so as you move the infrastructure up and make progress, you have new companies that are saying, now we can do this. So transactions per second is a big one because there's like a certain amount of transactions you have to reasonably achieve to be able to do things like credit card processing or an alternative to credit card processing and different things like that, microtransactions on chain. But everybody's sort of working on that. And so there's all these different sectors that, like, if you think of, okay, if this space is going to be successful, where does it need to be in 5 years? And then as the space and infrastructure matures, you get all these new use cases and sometimes entire verticals that pop up. And we want to have a diversified portfolio in a lot of those. Some entire use cases may not work out, and certainly some individual projects may not work out, but we're ready for that. And that's, I really think, my venture capital background is, no matter how sure, and you know this, Pascal, being a startup guy, having your own startup, no matter how good a startup looks on paper and no matter how good things are doing, it just takes one black swan event or one competitor to come out with a technology that makes yours obsolete. And so as an investor, you don't want to have that experience, right? You want to be in the best stuff. You obviously want to be in the foundational stuff. You want to be in the exciting new stuff, but you don't want to only be in certain things and then something that was completely out of your control or really unforeseeable, right? And crypto has these a lot, right? Like every cycle, there's an FTX or a Luna or a DeFi protocol that gets hacked and people are left scratching their heads. And you learn very quickly, and usually it's very expensive, that there's a lot more to this. And humans are always seeking with their investments to set it up and forget it, right? It's like, I want to find the place to earn interest on this money, or the stock that pays me a dividend. I just want to let it sit. So I'm willing to do a good amount of research to get it to a place where it can sit, but then I want to chill. Crypto's just not like that. Everything's very dynamic. Even when there's pullbacks in the market, if you have a drop of a certain percentage at the stock exchange, what do?
They halt trading.
Right, they halt trading, right? The system has, the government comes in and they can do monetary easing if COVID happens, right? Different things like that. That doesn't occur in crypto. It's a pure market. And so sometimes, it's hacks, sometimes it's technological evolution, but there's a lot of ways that projects can get derailed very, very quickly. And so I find that, having an experienced team, especially the more active the asset is the best way to go, unless you're going to choose to focus on that one sector yourself.
So one hurdle I had to go over when I started investing in crypto was, first off, I had to just believe that it was the future. Second, I had to figure out, did I want to hold more than just Bitcoin or Ethereum? Can you talk about why, if someone's sold on they want to be in the crypto space, why not just hold Bitcoin, Ethereum versus, diversified portfolio? Talk about the return profile of that.
Well, look, there are universes that exist where Bitcoin and Ethereum could fail and crypto be successful. So these are potential approaches. As Web3 becomes more smart contract driven and more of a platform, Bitcoin now is launching things like layer 2s to offer that. There's a lot of people that are like, Bitcoin was the first, and that's great, but the nature of technology is that we move on from that. Now, I think that's hard because Bitcoin has this unique niche of sort of being a store of wealth, and it's just picking up government adoption and being used on balance sheets, so it's hard to imagine that. But obviously there's certain people that are very vocal that they think Ethereum is already out of date. Now, we don't think that, but that's a possibility, right? So I think diversification is absolutely necessary in this space to some degree. Now, will you probably be okay just buying Bitcoin, Ethereum? Sure, but you're not going to get those exponential gains that a lot of people are also looking for when they're looking to be involved in crypto, right? Like if Bitcoin 10x's from here, it's at $1 million. Lots going to have to happen to get us there. And most people, when they think about the kind of gains they want to have, which is the same in venture capital, right? They want to have those big home runs. And so
where $1,000 turns into $1 million.
Right. Or I wrote a $25,000 angel check and it turned into $2 million, right? Something like that. And so obviously, I don't think you're going to get those from those assets. And it's also, the same as, because crypto is becoming so ubiquitous, I do think the lines are going to blur between non-crypto companies and crypto companies. So I think you're going to be involved in crypto to some degree, but I think a lot of B2B and enterprise solutions, like big companies, will exist that will sell Web3 based products to companies here in the future. And so it's really like, the diversification is to be involved with all those exciting things. If we have an investor that just wants to buy Bitcoin, I would say you shouldn't invest in our fund, right? You're going to pay way more fees in our fund, and frankly, you're not going to get the exposure you want because we don't just have Bitcoin. We have a basket of assets. And so some of our investors, they'll own some Bitcoin passively, but they often run into the same issues where they're scared to set up their hard wallet. Or it's like this nightmare scenario they hear about where someone loses their seed phrase, or they have nowhere else to put it, so they put on Coinbase, but Coinbase isn't as secure as people think.
Yeah, I was hacked on Coinbase.
Right, and I remember that. It was like, I think that was like, you were like, man, I thought Coinbase was as safe as my bank. And when people do get hacked to their bank, but it happens more often at centralized exchanges. And so it's sort of like, well, what do I do from that? And yeah, you can own ETFs, but right now the ETFs can't generate really any interest on those assets, you don't have full ownership. You don't have full ownership, right? Like MicroStrategy is a play that's been big this year, but you don't have direct ownership to the underlying Bitcoin. So once again, there's a lot of people that want exposure to crypto. And I think as they learn more about it, they do want to be in the exciting stuff, because that is the nature of someone that's in crypto, like yourself, right? You had a coin you gravitated towards, started seeing these other coins pop up on Coinbase. Then you started to get into on-chain, only DEX listed projects, and it's exciting, just like startup investing. And there are people that love to do it themselves. They just have to go through those learning lessons and be willing dedicate all that time. Where most of our investors, they're just putting a percentage of their net worth in. They want to see it grow. They want to see it grow more than the stock market. And they want to participate in that financial upside while understanding the underlying thesis.
Why do you think we're having a trend lately in this bull cycle with governments around the world adding it to their balance sheets? And what do you see happening throughout the cycle?
I do think a lot of governments have, well, there's a few things going on that, and these are my opinion. One, when Russia was excluded from the financial system for its involvement in the Ukraine war, I think there were a lot of countries that saw Bitcoin and crypto in general as they really understood the freedoms that it enables. And whether you think that's right or wrong, what side of the fence you sit on, I think every country probably said, we need to have a reserve of money we can move, no matter who doesn't want us to move money around, right? And that is, of course, the nature of the freedom of crypto. You also have a lot of failed governmental monetary policies, especially in third world countries. So much in the same way that governments would say, or not governments, our investors would say, I don't want to do this myself. I want someone at the helm for that. There are some governments that are starting to say, like, we just are so in over our heads trying to compete with the US dollar and have our own, currency and our monetary system. We would like to move more towards using Bitcoin. And you're starting to see some countries doing that. And then I think the biggest reason, especially in the US, you've seen this, is this recognition of this is here to stay and this is the future of really technology. And America is a country, especially, that's been built upon attracting the brightest minds and the biggest technology companies. And that, of course, has led to things like technology has gone into military and different aspects. And so if you think of an alternative universe where maybe Google and Facebook and Amazon and Apple were all headquartered in another country, like when you think about that impact that would have on the US economy, our GDP, it would be very bad. It would have been disastrous. And I think government officials are starting to realize that. And the last thing I would say is, there were a lot of government officials that were negative crypto, but crypto's interesting because you almost never meet anyone that spent a lot of time on it that is negative on it. So I think people are getting more educated, right? People are getting way more educated on the technology and what it is. And then when they experience it, they're like, oh, this makes tremendous sense. Like, if you're telling me that if I want to send money to somebody, I don't have to pay $100 and wait till the bank opens and the bank maybe flags it and they say, hey, like, we don't think you should send Mike this amount of money, or we want to double check. And you're just frustrated because you're trying to get money to somebody. And people are like, yeah, that should exist for everyone. And so once again, it's about basic human freedoms that feel natural when they're experienced.
Love it. To kind of take us home here, give us a little bit about what are maybe some mistakes that you're seeing LPs make, and what should they avoid in this cycle as this becomes hyped and we hear about it more and more?
Well, when you say LPs, I think you mean, just to clarify, you mean our LPs or you mean just people in the space?
Yeah, I guess at first I was just thinking general investors, but, I think specifically to our target audience, LPs, people that want to be investing in funds, or maybe just anyone who's wants to be investing in the crypto space, whether it's through a fund or not. What should they be careful of?
Well, first of all, it's really hard to get good information, right? So a lot of LPs will go on Twitter, they'll go on Reddit. There's a lot of fake information by design in crypto. And because it's so easy to launch a token, think if you and me could start an LLC tomorrow and that could be on the stock market, or somebody could discover that. And we could have a whole marketing budget to talk about how amazing it was. And maybe it's not legal, but it's pseudo-anonymous, or maybe we're located overseas, but we can tap into US investors this way. There's less, the nature of the freedoms that come with crypto mean that you have to own the consequences, right? That's a natural trade-off of freedom. And it means that you have to be even more acutely aware of what's going on. And so I see a lot of LPs. First of all, the number one thing is I see people get involved in meme coins a lot. And if you categorize that as gambling, I think that's fine. But there are a lot of investors. I know one person that has 90% of their portfolio in meme coins. And I was like, well, you're not really in crypto. you're really just kind of like in a known Ponzi scheme, but it randomly is going to collapse and you might get out at the right time, right? So I see a lot of that. I also see a lack of basic understanding of risk management and security. And so another consequence, when you think I put money at the bank, right? You have the majority of your net worth, let's say in the traditional financial system, you don't worry about security, right? You don't worry about it at all. In fact, you don't even probably ask about security, right? It's just assumed. So there's two things there. One, like you learn with Coinbase, you would have to be like a security expert to figure this out. But what is the place I'm putting the crypto? What are they doing? We have an independent auditor that comes in, a fund admin, and assesses our positions, and we proactively do that. And we use all the best tools. But the problem is if you don't want to put your money with the banks and you want to have a safe in your house, now what do you have to do? You have to learn about safety systems, how people could get through those. You're your own line of defense. And so people don't realize that they're signing up for that, but I think they have to sign up for that. They either have to invest with somebody that they really trust or they have to take on the burden. I think actually most humans would rather invest with somebody they trust because that's how banks became a thing in the first place, right? And the amount of, when you're searching this information, the amount of ways that people are trying to get your money in crypto is just mind-blowing, right? There was this famous 3M commercial where they put in one of their, bulletproof cases, like can't penetrate $3 million or something like that. And they set up a security camera and everybody was like, there were just random people on the street, like cars trying to drive through it. That's kind of what crypto's like. So, if I need to get access to a team member the traditional way in crypto, and I don't have a connection with a team personally, or I can just text them or something, I got to get on a Discord channel or a support chat channel, which that is in itself, people don't understand that statement. They're like, what do you even mean? There's no support line to call. Even Coinbase, you experience this, you can't really get anyone on the phone, right? Especially in real time. So you get on this channel, and even if you know what you're doing, and you say, I need some help, and immediately 4 hackers try to represent themselves as team members. And they're so sophisticated, they'll have entire fake support tickets that will go into fake support queues that will take you to a fake website.
This is how I got hacked on Coinbase.
There you go. So see, and you didn't even know. And so what's happening is there's feeding of false information. For instance, if you go on Twitter and you go to the official crypto page of a project, they'll make announcements and they'll add links. Well, under each announcement will be a copycat account that has one letter off. And they'll make a phishing link in there. And a phishing link is a fake link where it will take you to a malicious place where they'll try to steal your funds.
And it's just incredibly difficult to know if you're talking to the right person. That's what it was.
It's incredibly difficult. There are lots of tools that we use to prevent all this stuff, but all of them, you have to know about them, and you have to know how to use them, and you have to understand. And then hackers, it's this constant battle, right? And traditional finance firms, hedge funds have security teams that try to prevent this stuff as well. But I would say in the traditional financial system, even if your systems get hacked, it's a lot harder to actually pull money out, right? Because wires can get flagged, different things like that. In crypto, it's getting really hard to get for a hacker to get their money into the real world, like out of the system, because there's firms that will flag malicious addresses, things like that. But it's not hard for them to get your wallet, trick you to send money to them in a way that you may not even know that you were doing. Now, obviously, this is one of the things the space is working on, and we think is a big area of opportunity. But as it sits right now, the analogy I give to somebody is you buy a stock, you get a certificate, and they say if you lose the certificate, you don't own the stock anymore. And if somebody comes along and asks to, check your refrigerator or poses as a repairman, or your maid comes in and takes the certificate, they now own the stock. And it's like, that's extremely stressful to think about that situation, right? But that's what happens, especially when you start getting on chain. So, what we wanted to do is create a solution that addressed all the pain points you and me felt as we were getting into crypto, and acted as the captain of the ship for people so they could sleep better at night and not stress. People in crypto, especially because it's 24/7 markets, like once they get in it, they're checking the price. Like, you were doing this for a while. It's like you're checking the price all night. And so, that's really what we see in this space as some of the opportunities for improvement, but also some of the things that we do to keep people safe.
Mike, thank you so much for sitting down with us today. Where can people learn a little bit more about Crypto Bull Capital or Digital Wealth Insider?
Yeah, so we did a rebrand. We're at digitalwealthinsider.com, and you can catch us there. We also put out social education, Mike the Crypto Guy. What we want to do there often is interview founders, because we want to highlight that tokens are not just this obscure thing that's made out of thin air, that it's representing a team with a CEO and a head of marketing and a head of product and a bunch of engineers, just like you in a startup. So we want to tell those stories. We're very passionate about that. We've also got a newsletter you can sign up on the website. And then I'm Mike Klein, digitalwealthinsider.com, and really easy to find on LinkedIn. So whatever floats your boat, whether it's you just have a question or you want to learn more about the fund, don't hesitate to reach out.
Yeah, and you can also just reach out to me, and I'm happy to make an intro. Thank you so much, Mike. See you guys.